now to talk about that. Aman, if you can just start by telling us what is the exact service that you will provide to both Polaroid Film and Sciences, and can you explain the contours of this agreement? What is the kind of monetary involvement here?
Yeah, hi Sonia, good morning. Pleasure to be here again. We had a good day yesterday. We signed the long-term master service agreement with Polaroid, which is the holding company for the group of companies, including Polaroid Film and Polaroid Sciences. And so here we actually have a long-term relationship already with Polaroid, and we had a supply agreement a few years ago as well, and this kind of builds upon that and adds on to that. And so what we do is we do research, development, scale up, and ultimately supply of their required commercial quantities of materials and innovative chemistries and products that go into the Polaroid film business, which is the instant photography business. And as we go towards more effective, enhanced instant photography products. And then also their upcoming new division, which is Polaroid Sciences, which is innovative chemistry and technology in the areas of human health sciences and so sustainability, so medical use and therapeutics, as well as climate change and sustainability. So,
Aman, could you put some numbers to it? Could you put some numbers to it? You said you're already working with them. What is the total scope in terms of revenues to you from this customer, single customer? And if you can break that up, how much was, say, annual revenues from them? What does it go up to, and what's the total size of the business?
Yeah, Prashant, thanks for that. So I cannot disclose much information because it's confidential, but in terms of the value that will be generated, incremental value that will be generated from this master service agreement is amounting to USD $15 million, and so about 120 to 130 crore rupees over the next 3-year periods and then from the next fiscal year. And this does not include the revenues that will be generated from the cooperation and the research and supply agreement from the Polaroid Sciences, which is not yet determined fully, and this is something that we are working on along with them.
So this 120 to 130 crores that you said, this is the overall revenue that you're expecting, is it?
And that is in the CRAMS business and the CRAMS business model that we have. And this is so it is quite attractive because it's a very high EBITDA margin business model. And so that is the overall revenues from this partnership that we have.
And this is over the next 120, 130 over a few years?
Over the next 3 years. And this is the number we are comfortable with putting out in the MSA. And again, as I said, this does not include the numbers that will be generated from the Polaroid Sciences division.
Okay, so how much will you generate from the Polaroid Sciences division then?
It's a very exciting front for them. So we are doing innovative chemistry under patent molecules for a variety of different salient challenges of the Earth today. And so sustainability, climate change, therapeutics, medical use. And so it's a very exciting field that they are on. And we're very happy to be partnering with them towards the entire value chain of research, starting from the research, making the molecules towards the ultimate supply as they commercialize these technologies. And so it'll be very interesting to find out. We are eager to find out.
Sure. You also said this is a high margin deal and it's margin accretive for you. What does this mean for blended margins then, Aman? Because you're in the first half, you did almost 30%, back at almost 30% margins. Yeah. You could do much better than that, you think?
Yeah, Sonia, I think we can. Overall, the CRAMS business model is high margin, but it's about 13 to 15% of our overall revenues, which this MSA belongs to. Then we have the exclusive manufacturing and the large-scale manufacturing business models, which is approximately 28 to 30% margins for us. And so as the years go on, and as I've always been talking about this, as we sign more and more of these agreements, which we are actually working on numerous angles towards, we expect that these margins, overall cumulative margins of the company, will go up over the next 2 to 3 to 4 years, say, for example.
So are there any investments that you have to make from your end, or is it from the existing facility?
No, it's from the existing facility. And so if you remember, we have already expanded by triple in size the R&D infrastructure that we have, as well as the pilot plant infrastructure that we have over the last 1 year. And this will fit in perfectly into this expanded infrastructure that we already have and that is already operational. So there's no capex that has to be done towards this MSA. It's going to be done in the existing facilities.
And CRAMS, you've said earlier you'd want to sort of have about 30% of your revenues coming from that business, right?
So CRAMS, I would like to have 20%. So right now it is 13%. I would like to have 20% coming from CRAMS overall, and the remaining 40-40 equally divided between the large-scale manufacturing and the exclusive manufacturing. And the exclusive manufacturing is the product of molecules that go into commercial manufacturing from the CRAMS business model. And so overall, this will be bigger.
Okay, all right, Aman, thanks so much for stopping by and filling us in with all of those details. Look forward to having a chat with you rather soon. Well, the next company on our